You might have seen Strike on Cardano go absolutely crazy over the past couple weeks. You might be wondering, how in the world can I trade these Cardano altcoins? How in the world can I know about Strike before it's going to become what Strike became? And how can I make the 1000x, 100x, whatever amount of money return that you would like to make? How can you identify these things? How can you find Cardano altcoins that are going to absolutely rocket your wealth and rocket your portfolio? Well, there's a very simple way to do this out in stocks that I've been working to build this into Cardano, into smaller crypto ecosystems that I want to share with you today. How I go about finding some Cardano native assets that are at a good buy point, at a low risk tolerance for what you're trying to achieve, and how you can find these at the exact same time without too much risk. There's going to be risk in everything we do here in Cardano, and inside of Cardano, there are not as many tools. The way that you can apply this in stocks, you can have a lot more tools at your disposal, a lot more notifications, a lot more charts, a lot more stop losses, a lot more liquidity. So there are going to be some inherent risks with doing this in Cardano that you cannot avoid. But if you want to have a better percentage chance of hitting a big home run on a Cardano altcoin, this is exactly how I've been doing it. This is how I think a lot of people could benefit from doing it. And this doesn't just come from me making a bunch of wins. I've made some good wins on Bodega, on Palm, on some other tokens in Cardano, and I've also taken a bunch of losses. I'm sure a lot of people are familiar with the losses I've taken on LenFi, and it's okay. It's a part of trading. It's a part of learning. You would not be where you are without the losses that you've taken in your life, and so this is from somebody who's taken losses and wins and cannot wait for the Cardano altcoin season to start so that we can make as many wins as absolutely possible. Also, before we get too deep into the video, if you could do me two favors. One, can you please subscribe to the video? And then two, in the description, if you're interested in how to make money on Cardano native tokens or any crypto basically, join me in my newsletter in the description, the Crypto 100x Blueprint. We talk about everything we're going to talk about in this video, except it's going to be like 10 times more, and I've been doing it for months, and there's going to be a lot of value down there for you. So if you find this video interesting, you'll definitely find the description of this video interesting, where we have the Crypto 100x Blueprint. Historically, what I would say is that you want to find projects with amazing fundamentals in order to make this massive amount of return on Cardano. But I've actually been updating that over the last couple of months. Over the last couple of months, what I've actually realized is that you want to have a fundamentally sound project, yes, because those are typically the ones that are going to run the best. But in Cardano native tokens, or in crypto as a whole, we don't have earnings. We don't have earnings per share. We don't have PE ratios. We don't have revenue. We don't have a lot of metrics that stocks and equities have because they're regulated and we're not really regulated. And a lot of blockchains, like, there's transaction fees and stuff, but at the base level, when you get into the native ecosystem tokens, it's kind of hard to tell sometimes how much revenue they're making, how much money is being made, what kind of shareholders there are, and what the distributions are, or if there's a dividend of tokens, or liquidity provisions, and how that all plays into what you're making as an investor. So in crypto, yeah, we have a little bit of a harder time, but these fundamentals are still important. Fundamentals are still going to be important, but they're not going to be the first thing on my list anymore. So what we want to do here in these Cardano native assets is, yes, we want to find fundamentally sound tokens that have, a good use case and a good team and are building and, have good tokenomics and are, decentralized if you care about that. But on the flip side, the technicals are becoming more and more important in my strategy. So not only do we have this fundamentals that we look at, but we want to look at the chart. If a token is not checking off the exact things I'm telling you in this video, then it doesn't matter what the fundamentals are saying. The chart is going to be the sole decider of whether a project is worth investing in or not. This might come as a shock to a lot of people who have watched this channel. I know a lot of you are probably longer term investors, and I'm hoping to kind of give you some insight on why that might not be the best ability or the best thing to do in this video when it comes to pure Cardano native tokens, these risky altcoins. But I want to show you how we're investing into the technicals of this. And when you get the technicals right, you're probably getting the fundamentals right. And that's because other investors that are smarter than you and I are understanding the fundamentals and understanding how, hey, that means that this token is going to go up. I need to start buying. That's going to build the technicals. And so while we might not be buying the bottom, the technical indicators are going to help us understand which projects are the most fundamentally sound and which ones larger Cardano whales or investors are buying, therefore making the price go up. So for our fundamentals, what we're going to look at again, what you should look at, again, we're not going to talk about it in this video, but what you should look at is the decentralization of the project, the use case of the project, the team. Has the project delivered, or is it still kind of building, right? Building basically means doing nothing. And what are the tokenomics? What's the token utility? Who owns the tokens? What's token distribution? And are there any venture capitalists or the team, or is anybody dumping, right? Is there a lot of token supply that needs to come out? Is that supply coming out this year, next year, in 10 years, 100 years? What's the example there? And, just what is this project? Are people using it? Does it have a niche use case? And is it the biggest and the best for its sector in the Cardano community? After you do all that, then you can come over here to the technical side and do exactly what we're going to do in this video, okay? So the first thing that you want to do when you're looking at the technicals, I'll give you a couple key things we're going to look at when we get to the chart here in a second and show you some examples. But for the technical aspects of what you want to look at on a Cardano native token, the first thing that you want to see is price going up, okay? And the way that you can do this is you can look at a daily chart, and what you want to see is you want to see price over the 50-day moving average. That's number one. The second thing that has to happen is price has got to be above the 200-day moving average. And most likely you want that 200-day average to be below the 50-day moving average. So you want price, and you want the 50-day, and you want the 200-day. Now this isn't always perfect because newer Cardano native tokens are not going to have a 200-day. They might barely have a 50-day. Like Palm, for example, I was working on the 4-hour chart, and then now I'm working on the 12-hour chart, and I think just recently it now has a daily chart that has a 50-day on it. And so we're a little bit limited here with these brand new Cardano native tokens, but what you ideally want in a perfect scenario is price above the 50-day, and then hopefully price above the 200-day, and then the best scenario is the 50-day over the 200-day moving average. If you want to change this to a weekly chart, if you have enough information like on LQ or Indy or Lenfi, then you want price over the 30-week and the 30-week over the 40-week. And if you want to get even deeper, you can have price over the 10-week, price over the 30-week, the 10-week over the 30-week, and the 30-week over the 40-week moving average. Those are your technical setups for finding Cardano native tokens in a good uptrend. The next thing you want to look at is how close is the Cardano native token to its all-time high. And don't worry, we're going to get to the chart in a second, and I'm going to show you some examples. But how close is the CNT to its all-time high? If it's within 25% of its all-time high, that is a Cardano native token you should be watching. If it's breaking out to a new all-time high, that is a Cardano native token you should be watching. If it is making a new low, or if it is pushing lower, you can probably forget about it for a little bit. The third thing that we want to look at is for a solid base to buy from, all right? So we don't just want to buy, and this is going to go into risk reward potential for Cardano native tokens, but we don't just want to buy an asset that is shooting straight up, right? With the 50-day 20% below where price currently is, because that means price can correct in a healthy manner down to the 50-day, and you can lose 20% of your portfolio just like that. And so we want to find cup and handle patterns or volatility contraction patterns that allow us to buy at a low risk reward level where price has come up off of its base a little bit and is moving to the side along a resistance line where volume might be decreasing a little bit, and then we want to buy in that area or as it is breaking up out of that area in order to reduce our risk profile. What this is going to do is hopefully give you immediate profit when you start buying these Cardano native tokens, or limiting your downside risk to only 10%, 7%, 8%. And so you can understand, here's how much I'm willing to lose. I'm willing to lose 8% on this trade, and I can see that because price has been moving in a handle, and the 50-day is 8% below my price, and that means if the trade goes sideways and breaks below the 50-day and I cut my loss, it's going to be at 8% or 9%. But the upside potential is 10x, right? And so these are the things that you have to be willing to give and take when you're investing into an asset. And whether you're a long-term holder or a short-term holder, this information can be good for you. Okay, so that's exactly how you find the rules of how to find good Cardano native assets. It's not always going to work out, but on your downside, you can limit your risk, and on your upside, you can maximize your potential. Now, let's apply it in real examples and show you a couple examples of how this went really good and how this went really bad. On the screen here today, you can see Palm. I personally think, and I want to disclose that I am heavily invested in Palm, and I've been buying it right here in what I believe to be a handle or a first contraction of this volatility contraction pattern that Palm is doing. So I own my Palm right here, and I'm expecting it to break above this line, okay, just for disclosure. But you can see what Palm did here and how this has the earmarks of what I've been talking about. So Palm started rising, and now if you were investing in Palm at the very beginning, you would have been on like a 2-hour chart or a 4-hour chart, and it would have looked something like this, right? There wasn't as much data, but you can see here we have the 50-day, the 100-day, the 200-day, and the 21 day. And really, it's not the day because this is a 2 hour chart now, so it's a little bit weird to talk about. But basically, you can see how when Palm started going up, it held this 21 day and this 50 day immensely. This is the sign of a bullish trend. I bought into Palm right here as it had gone up, made this beautiful cup and handle base. Let's zoom in here. You can see this. This is a cup and handle base, basically. This is the handle, this is the cup. And I bought it as it was coming out of this off that 50 and 21 day. And I wrote it up here and then sold my profit as it moved into this 21 day. Okay. Then as that happened, Palm came down here and it's been consolidating, right? And I tried to do a little play as it broke out of here, but then unfortunately price rolled off and I had to take my break even loss and I sold it right around here. And then you can see Palm just continued to decline, decline, decline. And then here we are today. I want to go back to a daily chart just so we're talking in the right terms here. But now you can see we're back here on a daily chart. This is the 21 day in green and this is the 50 day in yellow. And what is Palm doing? Right? It had a bottom. It's coming back up. It's within a good percentage of its all-time high, which is up here at around 0.00368 ADA. Today it's at 0.003 ADA. And Palm is coming back up. Now, what I see here is a directional choice that Palm is doing. If we follow our rules, we know Palm is getting closer to its all-time high. We know it's above its 50-day. And we know that price is off of its bottom and it's building this cup and handle type pattern, with this being the cup and this being the handle. Now, what I'm suggesting, and I'm going to move down to a 12-hour chart just so we get a little bit more data here, is that based on this pattern, this cup and handle pattern, you can buy Palm right here because your downside is limited given the rules we've been talking about. And so what I mean by that is that right here, if you were to buy, that means price could fall all the way down to this 50-day and break below it, and you only risk a 9 to 10% loss. That means that on the upside, you need to make about a 20% loss in order for your averages over trading to be relevant. But this is an example of a Cardano native asset that I think is in a very good position because it's close to all-time high, price is above the 50-day, and the 50-day, well, the 50-day is not really going up yet, but the 50-day is almost going up, and we've had a bottom, and we're making a new high, and we're at a risk-reward point where price can come down. It can break our thesis. You can sell at 9 to 10% loss and you can move on with your life and Palm can fall forever. Or you can risk what you want to risk right here and then make an amazing gain if it pushes to a new all-time high. Okay, so this is one example. Bodega is another example, and I bought right here. Okay, I bought right here. This is a daily chart. And what you can see is that Bodega built this double bottom pattern. And on the double bottom, the middle point of the double bottom is the pivot point. So that basically means you want to buy as it breaks above this midpoint, right? So bottom one, midpoint, bottom two, you want to buy on the midpoint as it breaks above. We also see how price is in an uptrend against this 50-day moving average, 21-day moving average, and it has been consistently going up and holding that. So I bought Bodega around here and I sold it up. I sold half up here at this massive candle upwards on this red day when it started to retrace a little bit. I sold half, and then I just sold a bunch right here as price is now coming back down. What could happen here with Bodega is it could simply come to the 21-day, build a new cup and handle, and you would buy it off of this buy point right here as it comes back up, confirming the uptrend. You can buy it just right here if it were to build a cup and handle pattern again, and you'd buy it on the uptrend, okay? So this is Bodega. This is another good example of the rule set that I'm talking about. And I don't know anything about the Palm fundamentals. I know about the Bodega fundamentals. And then another one is Strike. And so I don't know a ton about Strike's tokenomics. Let's see. Strike. I don't know a ton about Strike's tokenomics. Tab Tools gives us a little bit of information over here. It looks like 18 million circulating supply out of 25 million. So not a lot of tokens being released. But besides that, I know that it's a longing platform, like a leverage platform, but I don't know much more than that. But I know that if you were to buy it right here as it broke above the 21-day, above the 50-day, and you simply wrote it like this, you could have made an amazing gain. Now, what's happening here is Strike looks to be building a base. The question is this a stage 3 base or a stage 1 base? Stage 1 means it's going to break out and keep going. Or really like a stage 2 continuation base is what it would be. This is the stage 1 base down here. But if this is a stage 3 base, basically this could go bearish if Strike breaks below the 21-day and continues to fall. If that were to happen, sell all your Strike. It's probably going to go to the 50-day, and then you can decide what happens there. If it falls below the 50-day, sell all your Strike again, and just don't ride it all the way down. But basically, you can see how back here, Strike was building this base. this base right here. Price was going in and out of the 21 day, the 50 day, the 150 day. And then as it broke above, built a little mini base right here. It found its stride and you could have bought it as it was moving up here. This was back in the day. This was really like the all-time high was right here. And as it broke above that all-time high right here, you could have bought and just rode it at an immensely high amount up. Now, there's a lot of bad examples. Let's look at Indy, for example. If you were to switch this to a weekly chart, since we have so much data, and put on the 30 week, the 40 week, and the 10 week, you can see how back in 2023, you should have sold all your Indy right here as it broke below the 10 week and then broke below the 30 week. You should have sold all your Indy at this point. Then it rode this down for 2 years, found a bottom in 2024, came back up, got rejected off the 40 week, came back down, made a double bottom, and now here we are today where Indy is trying to get above these weekly moving averages. I think this is a pretty good spot for Indy, but I want to wait a little bit longer. What you want to see is now price is above the 30 and 40 week, but we want to see this 10 week continue to come up. What we want to see is a base to form, and these bases can get very volatile. What I kind of see here is like a little double bottom price action or a cup and it's building a handle right here. And so for me, I think that this resistance line right here at about 2 ADA is a great spot for Indy. And if price can get above that on the breakout, it could be a good time to buy and ride it up to here where it might get rejected and then play in here before continuing much higher. One more example of a bad investment to buy right now that, again, I've been telling people don't buy LenFi recently over the couple months and weeks. I unfortunately was buying LenFi in this area, right? I thought, this is going to be the bottom. And this was a big lesson for me right here. But unfortunately, LenFi had this massive run up above the 50 day, and then it cut below the 50 day right here. And as that happened, a smarter investor would have sold all their LenFi and let this price just ride down, 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 down. Because see, it hasn't stopped. It tried right here. We were in a good amount of profit right here, and this was feeling good time for LenFi. But as it broke again below the 50 day, we should have sold, and now it's just kind of fallen much further. So on LenFi, I wouldn't buy this as below the 50 day. Maybe if it builds a base, starts to break out above the base, then you can buy. But as of right now, I don't think it's a good buy. The only things you need to make a lot of money on Cardano native tokens is price to be above the 50 day, or if your chart is so new that it doesn't have a 50 day. Let's see, something like roll. Roll is so new. There's barely any data, right? You can see this here. The 50 days down here, price broke above. Maybe it's coming down to retest. But in this scenario where you don't have as much data, what I do is move to the 12-hour chart, okay? Now we can see our 150 and our 200 coming into play. That's a little bit better. If you need even more data, what you then can do can go down into the 4-hour chart. This is going to become a little bit more tricky as you move deeper and deeper into the lower time frames. You want to stay on the day and week as much as possible, but if you need to, you can go into the lower time frames. The other thing that you want to look at is there's a really good token with a really good double bottom setup, but there's no liquidity, so I'm not buying it. MNT, the Mint token. Look at this beautiful double bottom right here. Price is coming right into the midline again, right here. And this would be a perfect buy point. It's holding the 21 day. It's holding this double bottom. It's breaking out to the upside. This is a beautiful chart right here. But the problem is it does 3,000 ADA a day. And today, one day, look at this day. This day it did 30 ADA volume. You can see volume right here for the day. 3,000 ADA. This is 30 ADA. This was 4,000 ADA. This is 250 ADA. And so if I want to move in with a couple thousand ADA, I am trading against myself, right? You would be trading against yourself. If you want to move in with 300 ADA, that's 10% of the daily volume. And so that's not really a good asset to kind of get caught up in, because you can see down here, 6 people are buying and 4 people are selling. This is really not a good advantageous spot for you to kind of ride liquidity. And so you don't need a lot of liquidity, but you need some liquidity. Whereas larger assets like, let's see, Ajax is doing probably 40,000, 25,000 ADA a day. Let's see, LenFi is doing 15,000 ADA a day. SNEC is doing 1 million ADA a day. IAG is doing 500,000 ADA a day. Indy is doing 66,000 ADA a day. And so you need probably, 30, 40, 50,000 ADA a day at minimum in order to have a good trading environment. But if you want to trade Cardano native assets, if you want to learn exactly how to do it and how to make the most money possible, the rules I laid out in this video are exactly what I would tell you. And that is how I've been trading. Again, my current portfolio is primarily in LQ and Palm. And you can see what those two charts are doing. Let me show you. I showed you a Palm. Let me show you LQ. And this is just for my ADA trading wallet. This isn't for the hold wallet. In the hold wallet, I still have LenFi, Hunt, and a couple other tokens. But this is LQ. I really like the weekly chart, so I want to show you that first. This is the weekly chart. Price was falling below the 30 and 40 week forever, but now it looks like it's building this bottom, right? We have this stage one bottoming action, maybe a cup and handle forming. If the handle, the cup comes up, the handle would form right here, but price is getting above that 30 and 40 week moving average here. That to me is a good sign. Volume is fading, meaning that sellers are leaving and it's only buyers. And I really like what this price action is doing here. Then we move it into the daily chart, and you can see how price is, again, this is the yellow is our 50-day. Price is above the 50-day. Price is above the 200-day. The 50-day is in an uptrend. And, we had right here, we did have a cup with a handle formation right here. This being the cup right here. This being the handle because it retraced down. This is the handle. I was buying LQ right here in the handle, had this massive up day and has been holding this support line since. And so, in my opinion, this is good. This is a good time to have contracting volume. And today was a huge volume day, meaning that to me, a lot of people are buying and selling, or a lot of people are buying. This is a green day, and that's going to be an indicator that price is coming up. But if you were to buy LQ today, your risk is pretty low. Price is right here. 50 days right here. It's only a 7 or 8% risk. If price breaks below the 50-day, you sell all your LQ and you wait for it to set back up. This is how I am trading Cardano native tokens. This is how you can trade Cardano native tokens for very easy rules. The one negative thing about LQ is it's not near all-time high, right? You have all of this sell pressure to kind of work through, but it's been years since we were there, so hopefully that won't be as impactful today. This is how to trade Cardano native tokens. You got any questions, leave it in the comments. I'd be happy to answer. I love trading the charts. I love the fundamentals. I love the tokenomics. I love all of it. So drop a comment down below. I'd be happy to answer and talk about it. And yeah, that's Cardano native tokens, how to trade for massive wealth. I think altcoin season has not even started yet. Cardano season has not even started yet. And we'll need something like Bitcoin dominance to start falling to the wayside before all these assets really start going. You're not late at all to Cardano native tokens. None of these assets are even close to taking off. Not even Strike, not even Bodega. And while Strike and Bodega might correct, might drop, I think Cardano native tokens have a very bright future.